And welcome back once again, options traders. Well, I got a special request for a technical indicator called the McClellan Oscillator. And this can be a handy tool for markets like this when you're trying to figure out if we're maybe coming out of a bottom where some significant turning points might be. What makes this oscillator unique is that it's not for a specific stock, such as the MACD or the RSI, things that we've looked at before. Instead, it's for a basket of stocks, such as the NYSE or the NASDAQ 100. It's really what's called a breadth indicator. The breadth is just looking at the number of advancing issues in a basket of stocks compared to the number of declining issues. So a very neat little tool. So let's go find out the details of the McClellan Oscillator. As always, before we do, please be sure to click like and subscribe. It goes a long way into promoting the channel and is always very much appreciated. So the McClellan Oscillator, what it does is it makes use of a 19-day and a 39-day moving average. And again, this is called the advanced decline, or the breadth of the market is what we're measuring here. How many advancing issues relative to how many declining. So the oscillator is positive when the 19-day is above the 39-day, and obviously it would be negative when the 19-day is below the 39-day. So think about what's happening if the 19-day moving average is gaining momentum. In other words, the more recent trades are starting to pick up some steam. We're getting more advancing issues than declining. Then the 19-day will be a bigger number than the 39-day, and it will cross from below to above, showing that we are moving into positive territory. Now, a little side note, for today's standards, most of your platforms that will show the McClellan Oscillator use what's called a ratio adjusted oscillator. And what this does is that it accounts for changing totals of stocks. So the number of stocks we have traded on the NYSE today is very different from what it was maybe 5 or 10 years ago. So if you wish to make comparisons between today and some other previous time, you'd need to make sure that you've got the same number of stocks. Well, there's an easier way to do it. Just do a ratio adjusted. We'll just show them in percentages. So as an example, let's say that we have 1,000 stocks on an index and 600 advance and 400 decline. Well, you could say that we have 600 advancing out of 1,000 total, or 60%. But what if we now increased that same index to 2,000 stocks? And now we see that 1,200 advance and 800 decline. Well, that's still the same percentage. But if we had used the original oscillator, we would be led to believe that we have far more advancers. Right now we'd say, wow, look at that, we got 1,200 advancing compared to only 600. Well, but that's, again, not really a fair comparison. It's because, in this case, we have twice as many stocks. So that's what a ratio adjusted oscillator does. So when you do this, you're going to get a chart like this if you were to break them out. So here we have the 19-day in blue and the 39-day in red. So look what's happening. The 19-day is below the 39-day. So that shows that we have downward momentum. So if we were to take the 19-day in blue minus the 39, we have roughly 150 minus 200. We should have minus roughly 50 for this first data point out here. So this is what it would look like. We're just comparing the oscillations of this 19-day and 39-day moving average. But what your platform's going to show is a single line that is just simply that difference. So take a look. If we take the blue line minus the red and just take that number, this is what we get. So see right here is the roughly minus 50 that we got. So this is what your McClellan Oscillator is showing you. But what it's telling you is the difference between the 19-day moving average and the 39-day moving average. So to understand more of the details, let's jump over to an Excel spreadsheet and see the calculations. So now I've brought up the Excel spreadsheet that contains the data that created these two charts, and we're going to look at NYSE, New York Stock Exchange data. Now this data can be very difficult to find. I'm not 100% certain that these are lined up on the correct dates because the site that I got them from said that it wasn't updated anymore. They weren't currently maintaining it, but for our purposes it's fine. It's just to show some examples. But these numbers are actually real. Again, I'm just not real sure from which dates they were coming from. But here's the way that the oscillator would work. So let's say on this first date we had 2,111 advancers and 909 decliners. Well, the net advancers, just 2111 minus 909, is 1202. So once again, the original oscillator would have just reported this column of numbers. But if the number of stocks was changing, then it's not really making fair comparisons if you want to go back in time. So the ratio adjusted right here is taking this number, the net advancers, divided by the sum of these two. So it's putting it in a proportion or a ratio. Now in this case, they just multiply it by 1,000, so it's really showing 39.8% would be the way that you would really interpret that. So once we have this, it's pretty simple. We just copy that formula all the way down. So right there we have our ratio adjusted data. Now in the next column, we're going to look at the 19-day exponential moving average. So we're just going to wait for 19 days worth of data to appear. For this first data point, we just take the straight up simple average. But for the next data point, we're going to actually switch to what's called an exponential moving average. And there's a calculation that you do. You're just going to take 2 divided by the moving average plus 1. So that's probably why they use these odd numbers of 19 and 39. So we have 2 divided by 20, and that's going to give us 10%. And so that's what this weight becomes right here. We're going to take, if you look at the formula, we're going to take G minus H, which is this number right here, minus the most recent average. And then we're going to multiply it by 0.1. That's our exponential moving average weight. And then we add it back to the previous data point. So if that doesn't make sense, it's all right. It's just a way to smooth out the data. But once we have that, we're just going to copy that all the way down. We do a similar thing for the 39-day, but we have to wait for 39 days worth of data to appear. That's going to be a straight up simple average for the first data point, and then we're going to switch to an exponential moving average. So that's going to be 2 divided by 1 plus this, or 2 divided by 40, which is 0.05, and that's where that weight is coming from. So it's really the same idea. And then once we have this final column, which is our McClellan oscillator, this is what's going to show up on your chart, is just this number minus this one. And there's where the minus 56 is coming from. So the basic idea is that you're looking at is any time that this number is getting above 0, that the 19-day moving average must be above the 39. And that means the more recent data are starting to see more advancers. So that's just a very simple interpretation. There are what are called divergences. That's used a lot in technical analysis. But for the most part, I think just to keep it simple, if you can at least see that the 19-day is gaining momentum over the 39-day, it can be some insightful information. So let's jump over to the thinkorswim platform and take a look at how to put the McClellan oscillator on your platform. All right, so now we're into the thinkorswim platform, and I'm only going to show how to put the McClellan oscillator in thinkorswim because, at least at this time, E-Trade does not allow it. So for those of you on TOS, here's the way you do it. Come up here to Studies, go to Add Study, All Studies, and you're going to find it right under this menu. So right down here is the McClellan oscillator. Left mouse click there, and there it is. So remember that this is looking at the overall, over here it tells you this is on the NYSE. It is not showing it for NVIDIA, which is what I have on this upper chart. But you could still use it as a way to see if the stock is seeming to follow the overall market. But from this date right down here, roughly on May 9th, we got this big shift in momentum. You can see that big spike, and that's because that 19-day went above the 39. That's when it turned positive and went above 0. But even before it did that, you could see that the momentum was super, super strong through here. And now, right now, it seems to be backing off a little bit. But that's a real simple way to interpret it. There are additional ways. I'm not necessarily going to say they're better. But for right now, I just wanted everybody to at least understand the McClellan oscillator and to answer this trader's question. And so I hope that helps you to make better sense of the oscillator. If not, you can always post in the Facebook page for more updates. And for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz's.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.